Well, let's continue our discussion on what we saw in this employment report and what it may mean for your portfolio. Andrew Arons is with us, founder partner, Synergy Advisory Management Group. The takeaways from the jobs report is really showing that as the nation reopens, we saw a surge in leisure and hospitality. I guess we're not surprised, right? I mean, is this a good thing for us and our money?
Yeah, I think so. I mean, people are have been pent up with the coronavirus. They're ready to go. People definitely want to travel, go out. Obviously, waiting till they get vaccinated so it's safe. But people are, pent up and ready to go. So I think we're going to have a strong recovery as long as we get the vaccine out to everybody as soon as possible.
So tell me more about some of the headwinds that you think we could face. I mean, obviously, we're getting the vaccine out, and as things open, we see more jobs, but there are headwinds. Are you worried about the pace of everything?
Well, I mean, with rates going up, there could be some headwinds with that, but I think the Fed will keep that under control. I think we need to just, have a great recovery. Have the states open up, have people start to go out in the economy and feel comfortable. And if they do that, and it's better than expected, I think the market should do extremely well. Earnings look very good for first quarter, too.
So where are the opportunities then? Right? There's got to be some opportunities for investors, particularly as the economy is on the road to reopening and then fully reopens.
Yeah, there's plenty of opportunity out there. I mean, look, we've had some opportunity in the market right now. Some of the tech stocks, some of the big names just came down this week. We saw some major sell-offs, and that's always normal in the market. I mean, we always see the market, pretty volatile. We had a very, very choppy week, and that's to be expected. I thought we would see a rotation into value several months ago, and that's happened, and that's going to probably continue. Though, if rates can be kept pretty low here, and I think they are going to be kept low by the Fed, it's going to create a lot of job opportunity, and I think that the market is going to experience some new all-time highs as we go into the summer months.
So which sectors did you say would be winners? Because I know you've been following all things COVID, but expect the markets to make new highs, you said. And also, as we see what's going on here, better earnings as well.
Right. I mean, look, I think there's a rotation, into dividend paying stocks. The value stocks were crushed for a long time and they've been coming back. And you're seeing, money go into oil. These are stocks that have some great dividends as well. So I continue to see money going into utilities, oil, industrials, dividend-paying stocks. And I think that with rates staying low, the tech sector should be just fine over time.
Yeah, utilities, energy stocks, as you said, the dividend payers. It's pretty amazing what's been going on with energy. Do you think there's still room to the upside?
I think there's still a little bit more upside here with energy. I think, we've made a nice massive move here, but I think that it could continue a little bit more into the summer months.
When you talk about the earnings season being full of surprises, I actually was talking to David Darst, who used to be with Morgan Stanley Wealth Management. He was looking at some of the estimates and double digits in percentage terms to see the growth really overall. I think for the whole year, it was definitely over 20%. I mean, the comps should be easy enough, right?
I think that the comps, definitely. I think that the comps will be easy to beat, and I think that the market should do very well as long as we get the vaccine and we have a recovery here and the economy starts to reopen. I really don't see many surprises going forward.
Right. So, what do you think in the end? What's your crystal ball telling you about the S&P 500 and if the Fed makes any changes to current policy?
Well, I think the Fed is going to keep rates low, and I think that that's going to happen. I know people get nervous when they see the rates go to 1.5% or 1.6%. For the average person, I mean, they're not going to move out of the market to lose 1%. With inflation, people are losing money. So the money is going to come into the stock market. We even saw it today. The market had a big sell-off early, and the money came back in by the end of the day, and we had a nice finish to the week. I do think that we're going to start to see the markets do pretty well here. We needed a little bit of a sell-off. We got a little bit ahead of ourselves, and now I think it's overdone a little bit. So, I would assume over the next several weeks that the market's going to rally here.
Oh, all right. I like that. Andrew Arons, great to chat with you. Thank you very, very much on this Friday. Andrew, great to see you.